Hey, Ian, by popular demand, I think I'm going to be a permanent guest on the Ian cast from now on.
Yeah,
What do you think?
that's right. Yeah, sounds perfect.
Yeah. So, last week we went through the stock market. We went through all our usual Tesla, cannabis, pot, marijuana, and Bitcoin. And let's start with the market because with the freak out that's happened over the last
Yeah.
month, all of March, that's what everybody wants to know what is going on and what we might think might be unfolding.
Right.
And we've been having a lot of discussions on Slack about how we felt the market's unfolding, and what we sense is like some kind of consensus, sort of like of how people are kind of seem to be setting up for it, and where we think that it might actually surprise people.
Right. So like we've said like over and over, basically when there's a panic like that and a quick sell-off, that the market is pricing in like a really, really bad scenario. So just like it's looking forward to that, like it always looks ahead, it always looks at the future. It thinks something bad is going to happen in the future. In this case, almost complete shutdown of the economy because of this virus. But it's also going to be forward-looking in the case of a recovery of the economy. And once stores and restaurants and places start opening back up, that's going to be a huge kind of 180 in the direction of our economy. And the market, we believe, is going to price that in sooner rather than later because, again, it's forward-looking. You still see, of course, things are closed down, but you see these unemployment numbers coming in and the market's up. The market already anticipated that, but people are kind of getting confused about how can, record unemployment claims be out there and the market be up at the same time. It's because the market knew that that was coming. Everybody knows that, so many businesses are shut down. A bunch of people are filing for unemployment, but it also knows that when things do recover, there's over 6 million jobs out there. I think before this it was 6.7. Now it's still, over 6 million jobs available that were already available before all of these companies closed their doors temporarily. So, it's going to be a strong recovery and the market knows that. And we believe that it's going to price that in sooner rather than later.
Right. I mean, many people are anticipating. I've seen all the different alphabets, Ian.
Yeah.
There's the U recovery, there's the L recovery. Uh, but I personally believe Ian is actually going to be a V recovery because that's my recollection of like how an event-based sort of market crash and then economy sort of impact happens. In other words, this is something which is an event, it's going to pass, and then after that, there is no great problem that
Right.
from the financial system, from the economy, that we have to work through. There's nothing, the banks are not out of money. The banks are not bankrupt. There's no real estate bubble. There was no stock bubble. There was no asset bubble. There's nothing that the economy and that we have to work through. So essentially what happens is that once this virus goes through our economy, and it's like at this point, we've seen it's largely like really 4 or 5 big states that are generating the vast majority
Right.
of it. So many states are going to come out of it way sooner than that. You're going to start to see a pretty strong V bottom on the stock market because, as you said, and as we've been telling people, markets anticipate. They're not going to wait for the last case. They're going to wait for the numbers to show up. They will start to price that in always because it's always forward looking.
Right. And we've already seen some companies say, the ones that have reported earnings, a few of them have said that this isn't really hurting their business too much. They see it as very temporary, or it's not going to hurt their business at all. And we've seen this kind of reflected in some of the leading semiconductor stocks and the leading cloud stocks that are actually benefiting from this because it raises the demand for their products.
Right. I mean, so if you are in a cloud computing company, what you have seen
Yeah.
is like this massive, huge amount of traffic come your way, and you are actually scaling up as fast as you can to meet this crush of demand. And which is why, even though there's dire forecasts out there for all kinds of like crazy stuff, they are not counting for the fact that our economy today is way more digital than it has ever been in history. and the fact that people are not stopping work. A lot of work today happens on digital platforms.
Right. Exactly. So we're seeing some of those stocks even making new highs, or like, within a couple percent of new highs. So for that part of the economy, it's actually really good. And you're seeing like estimates, like they're raising their sales estimates. So it's actually a good situation for them. So you can benefit from the stock market. And I've recommended this before on Twitter. A good way to invest in cloud stocks is through an ETF. The ticker is CLOU. So that is a really good way to take advantage of that, because these companies aren't going to stop growing now. This is going to be the future of how a lot of people work, is from home, and the cloud is going to be their centralized workplace.
Right, and many people have been actually writing me. And Ian, give your Twitter handle to folks so that they can follow.
Yeah. Okay. Yeah. It's at Ian Dyer Guru.
And I am at Mampilly Guru, and people have been writing me and saying, hey, Paul, okay, we kind of buy into what you've been saying. And what are the first places that are likely to really go up the most? And from my perspective, Ian, I feel like we realize we have like a major problem on our hand. Whereas the last 20 years, we have shipped the making of things to China and to other places, but to China. And we are going to bring that back, which tells me that the industrial economy is going to roar out of this.
Yeah, and it's a great time to buy industrial stocks too, because a bunch of them got hit really hard by this.
That's right. And we are also thinking that industrials, many people think, whoa, Paul, that's like dull and boring. Come on, technology. No, the industrials are going to use high-tech technology, 3D printing. I was trying to think of other techniques, photonics,
automation,
lasers, automation, robotics, and generally all the things that people associated with technology are going to go into the industrials, so we can reshore all these industries so that as a country, we can make things like masks. I mean,
right. Yeah, when you're getting all your masks from like Tesla and whatever, Facebook, you know that something's got to improve.
Right. We have car companies that are being forced to make masks and ventilators. So we know that we need to be, probably for the next 10, 15 years, doing things in the industrial economy that we have largely sort of outsourced to other places. We need to bring this back. We can make it better. We can make it cheaper. We can use it making innovation. We can customize it. There's a revolution, I believe, that is going to happen in terms of making things that really like we've lost for maybe 1 or 2 generations.
Right, exactly.
Yeah, and also then new industries like space and others where we need to just come up with brand new things in a completely different way. And then the second place, Ian, that I would say that you're going to see a huge rebound is in housing.
Yeah. Yeah, that was another one. They're kind of tied to industrials. Housing stocks took a huge dive. Those are really good to buy right now. And the ETF for that is ITB that we like to recommend. You get a whole bunch of housing stocks just by buying a share of that. But yeah, housing stocks, a couple of those companies have reported earnings and said that this is going to have a really temporary hit on their business. It's not even as severe as they thought it would be. People are still buying houses. There's still a housing shortage. There's still the whole millennial generation that is clearly, has a high demand for buying new homes. So I don't think that we're going to see too big of a hit in that overall. Maybe like a couple months, but it's not going to be anything that lasts.
Right. I mean, and we have worked out that and we've seen big companies, Lennar, tell us the demand's still there. We had KB Homes come and tell us, things are actually growing. So that's a pretty good indicator that housing is solid. And then we have companies like Zillow and Redfin saying that virtual seeings are just like skyrocketing high.
Yeah.
Skyrocketing.
Yeah, those are going to benefit, definitely.
Yeah. So, I mean, the housing sector, people's like, oh, there's going to be a Great Depression. Well, the companies are telling you something completely different. Maybe like somebody's theoretical model is saying something. However, the companies that actually do this are telling you something completely different. And it does go to something that, we've talked about on Slack, which is that, we have been searching for the companies of the new. And the one thing that we have found is that, like, for example, in a lot of places, like whether it be healthcare, we can see there's old versus new. It's very clear. There's like a clear divide. However, when it comes to housing and industrials, it's fairly clear that there is no, like, the old is going to adapt and innovate and sort of take new things and become the new.
Right. Exactly. Yeah. So there's a bunch of, older industrial companies that are adopting automation, and, robotics and 3D printing and things like that. And all kinds of other things that are adapting really, really well. They don't really have to make as big of a switch as, say, a car manufacturer trying to like quickly switch an ICE car factory for an EV factory. It's a lot smoother transition for industrial companies.
Right. I mean, all they have to do is simply go to making some of the same things that, say, go into houses, go into other machines. They just have to alter their technique of production. And because of the fact that we have shipped the making of things outsourced to China, on some level, they haven't invested that much in sort of like, in continuing to keep sort of the old ways. So they actually have capital on hand. They can switch to things. And something like 3D printing is more efficient, it's cheaper than the old way, it's more cost efficient, and it means that they're likely to be much, much more profitable than the old version of what they used to be, which is why we're very, very optimistic about that part of the economy. And just remember, Ian, that at the top of the last market in the year 2000, what was the top company back then?
Wasn't it like one of the banks
No,
or
it was actually
like
GE.
oil?
It was
Oh, okay.
GE. It was an industrial company. And
Okay.
that tells you that when the economy is growing and housing is growing, those companies really boom.
Yeah,
They really
exactly.
boom. They really boom. So, which is why I have recommended that folks buy into what I call the sticks trade, which is semiconductors, solar, batteries, housing, biotech, healthcare, and then the industrials, the sticks trade. We'll put this little slide up quickly so that people can see what it is. And then also want to mention that this week we're sending out emails to the folks that are on the Bull Prophecies, which is our free e-letter, phenomenal, incredible e-letter, telling them about our IPO speculator product, which is filled with companies of the new, really all the things that we are looking at. So if you're interested in that, click on the strong hands above. That will take you to a page that will tell you everything about IPO speculator, incredible, phenomenal product, a service that tells you all about the new companies that are coming public every day, which we believe are really going to be the dominant companies of the future. All right, Ian, we've kind of done the market. Let's just round it out.
Yeah.
Many people, I've been getting a little bit trolled on Twitter by folks that tell me that I should be short, that I should be selling, that I'm wrong. And truthfully, from my perspective, everything is pretty much unfolding as I imagined it would, which is that the Federal Reserve has come in and in very fast order. First, they intervened. Then they said, hey, we're going to, provide unlimited liquidity to all the places to unfreeze the financial system. Took interest rates down to zero versus waiting for months and months for that to happen. Then we had the fiscal stimulus occur where in 3 weeks, we're going to have checks sent out everywhere. There's talk of an infrastructure stimulus, which would be also additive from that perspective. And then we also have the additional fuel of all that cash that is sitting on the side. And
Right.
Many people also are incredibly negative and bearish.
Yeah, it's like, it's become a crowded trade. Now, if you're not bearish, you're kind of seen like an insane person. So everyone's on one side, everyone's out of the market. There's all this cash on the sideline or, in something that's hedging. And that money's got to go somewhere. It's got to go into bonds where you don't make any interest, or like something else like gold or something that has really no use case at all. It's going to go back into stocks, and it's going to go back into the stocks that are benefiting from this situation. Like you said, there's all this money out there going to, help out businesses so they can survive this. And I don't think it's going to really take the toll that everyone seems to think it is, or at least that we're seeing in the headlines. I don't think it's going to have that much of a hit long term on our economy.
Well, there's also the aspect of the financial media, which has been persistently negative, pretty much really all through this bull market, is now really like out of control negative, just willing to almost always push the worst case scenario in front of people and panic people.
Right. Yeah. No good news comes out anymore. But there
Right.
is a lot of good stuff happening.
Right. I mean, and there's been a digital transition in our economy, which maybe in another time might have taken 3 to 5 years, but it's now happened like that. Like so many companies are benefiting, delivery companies, as you mentioned, cloud companies, any number of companies that, you know, in another time, it might have taken 3 to 5 years, but that transition now has happened essentially kind of overnight.
Right.
Yeah.
Yeah. And another one of them is, electric cars. And we usually talk about Tesla. And they actually just had a really good report an announcement that they delivered 88,000 cars, which I think the estimate was like 75,000 or something, or 76, which like they blew away the estimates. The stock is up a lot after the market closed. And it shows again, for like, the eighth or ninth straight quarter, the demand for Tesla's cars is way surpassing what anybody thought it would be.
I want to mention in a similar vein, the CEO of Slack, which I thought was really funny. He said, well, you know, at some point in time, we expect this to slow down because other than that, we would have essentially the entire world subscribe to Slack. In other words,
Yeah.
their demand is so insanely out of control, so phenomenal that they can project where like, whoa, so many people are just flooding onto that platform
Yeah.
that like, you
Yeah.
know, man, it's crazy.
And same with Zoom, which we're using right now. A lot, like
Right.
everybody's using Zoom now. Like
or,
instead of
or Teledoc. There are these
yeah,
platforms that are just going insanely mad right now. So,
right.
you know, we would just say temper your bearishness, temper your negativity. You know, when you go on to, certainly on my Twitter account, I don't know how much Ian uses it. I say I'm BOP, and that stands for bullish,
Yeah.
optimistic, positive. Fight the negativity and go BOP. That's what I would say. And, you know, so we are still bullish, still optimistic, still positive. And we would tell you that there is certainly for the companies of the new world that we are invested in, I believe by year end, Ian, we could definitely see them hitting new highs, which would
Oh
have
yeah.
seemed unthinkable even last week.
Right. Yeah, exactly. And of course it does when the market drops like 30% in 3 weeks. But then once it rebounds, it seems a lot more obvious than anyone thought it would be when it was at the bottom.
All right, so you know we've done the market. We are BOP, bullish, optimistic, positive. Let's do Bitcoin because today I actually started like yesterday evening. I started to see like this like persistent bid higher of like $100, $100, $100
Yeah.
higher, and it does look like that halvening, tightening of supply is starting to hit the market.
Oh yeah, for sure. Well, the that sudden drop in Bitcoin was such kind of like a false indicator of it crashing or whatever. It's not going to stay down here for long, and it's already recovered. It's already almost back up to where it was before that. And yeah, the halving's coming up. There's of course a lot of demand that I've noticed a lot of demand for other cryptos in general too. People are starting to talk about them more, which is great. You're seeing a lot more interest in some of the smaller ones, which we've talked about before as an example of a return of a bull market. But the most important thing is, of course, the halving for Bitcoin, because it all comes down to supply and demand when you're trading any kind of asset or investing in general. You want there to be much more demand than supply, and the supply for new Bitcoin is about to be cut in half, which doesn't happen in the stock market. It doesn't really happen with anything else. It's a very, very important event, and you can see by looking back to where other halvings happened, the price just like takes off for like 2 years after that.
Yeah, and I sent you a message on Slack saying that I've been tracking on this halvening clock. It was even as like late as like maybe a couple of weeks ago. The halvening was set up for May 20th and has now actually been rushed forward to May 13th. So in other words, the
Right.
miners anticipating the halvening are actually mining faster and faster. So where the supply is likely to shrink sooner. And I believe that's having a reaction as well on the buying side where people are seeing that date come forward, and they're starting to push their buys forward as well, increasing the buying and demand pressure on Bitcoin, which then also has the impact of actually bidding up pretty much crypto across the board, across the entire universe of cryptos, because what happens in Bitcoin kind of translates across crypto.
Yeah, exactly. And we've already seen, the amount of wallets and addresses that have not touched Bitcoin in over a year is a huge, huge majority. So people are holding it in their address for, a year plus. These are people that don't plan on selling anytime soon. And that even kept happening after that big drop. So that not only proved that the demand is real, that the hodlers are real, but it also brought in probably another layer of people that were waiting to get in, waiting for it to drop. And now they're in it for the long haul too. So that decreases supply even more, and the demand is just going to pick up.
So we usually cover Tesla, but being that we talked about the market a little bit, talk about Tesla, they reported great deliveries. From our perspective, Tesla stock still in a bull market. Model Y, Cybertruck, I mean, everyone kind of knows, like, hey, listen, this is going to be a big company. But I did bring one thing up on Twitter this week, Ian, which is like Tesla is not in the S&P 500.
Yeah, I know.
Which is crazy.
It's insane. It's worth more than all the other car companies combined.
Well, you sent me a text saying, hey, Tesla now worth more than Boeing. And then I went and looked in the S&P 500. GM is in the S&P 500. Ford is in the S&P 500. But there's no Tesla. And you could put together, and Goldman Sachs, GE, you could put actually all of those together, and they're not worth pretty much like what Tesla is worth combined.
Yeah, Macy's is in there too, and that's now a mid-cap stock.
Right, yeah. So,
or small cap, actually. They are, yeah, it's crazy.
Right, so I mean, who knows what the S&P 500 committee looks at to consider what should go in, being that it's fairly clear that a lot of these companies are going away and they're unlikely to really survive past the next 3 to 5 years. Tesla is going to be around and going to go from strength to strength from our judgment based on the products that they have, the fact that it's a beloved brand, and that they are the leader in actually 3 or 4 industries: electric vehicles, autonomous vehicles, battery technology, and then solar power. Yeah,
they just started installing their solar roofs too.
Yeah, I can't wait. I have like an old-fashioned solar, but I mean, I wish I'd waited for Tesla to come. All right, so we've done a market, Tesla, Bitcoin. Last one, cannabis. So you send me a text saying, hey, Paul, I really believe MJ has bottomed out.
Yeah, I know. 100% I do. Because this whole quarantine thing has boosted pot sales too. You see reports of lines longer than when it was first legalized, and companies starting 24/7 delivery services. There's so much demand out there for this, and this is boosting that even farther. And after a rough 2019, when companies were kind of slowing down because they were otherwise going to run out of money, they managed their businesses. Not that many of the big ones had that big of issues with that, but the market priced it in like they were all going to go bankrupt. So I think the price levels where these stocks are trading at is kind of ridiculous. And I said at the beginning of this year that I thought MJ was going to go up 100%, and I still think it can for sure. From where it was December 31st, I think it can still go up to 100 or 100% from there, which is probably 200% from this point.
Yeah, I mean, and so before we sort of end, I give my comment on MJ. Hey, subscribe to our channel, give us a thumbs up, and comment below. And so to the folks asking, hey, where essentially what they're asking is where will all this liquidity most likely go? Where it will shoot it higher? MJ looks as good a candidate as any, or the cannabis stocks in general. In other words, they're concentrated because of cheap prices in what we call strong hands, which means you want to get it, you're going to have to bid it out of them.
Right.
Yeah.
Yeah. And it's, like I said, these stocks are priced like they're going to go out of business in a week.
And they have great business in the sense that there's just unlimited demand, at least from what we can look at it, for what they sell.
Yeah, and it's only going to go up because in the United States, at least, it's only legal in like 2/3 of the states. So there's so much more room for it to grow from here too, like even demand wise in total.
Right. I mean, just like, illegal to legal demand by itself would represent
Yeah.
massive growth for these companies.
Yep. And it's taking, we call it the new vice economy, taking market share from the old vice economy, which is alcohol and cigarettes or tobacco. So there's so many like reasons that are coming together for these stocks to just skyrocket, and that can happen way faster than you think too.
Yeah. So bottom line, crazy March, a very difficult March. However, the basic underpinnings of all the bull markets that were going on are still there. Yes, there might be a recession in the second quarter, and might take a few more weeks before everything sort of like settles out and is stable with respect to coronavirus. However, the markets are indicating very, very clearly they're beginning to price a recovery, beginning to price a pretty strong recovery, which thing we think is next. And then we're giving you some sense of the sectors that we think and stocks that we think are going to benefit. All right, Ian, thanks for having me on the Ian Cast. You say goodbye first. I'll say goodnight next, and then we'll end it.
Yeah, anytime. So everybody, happy Friday, of course, and I hope everybody has a great weekend. And just enjoy it. The stock market again is going to go back up. We got to ride it out, and we're going to see our stocks flourish from here.
And I am BOP, bullish, optimistic, positive, and with that, I will say bye.